Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. I got a lot to talk about today. Got to bring you up to date, and we're going to try to move along as quickly as possible. If I move too fast, because I'm trying to compress everything, please review the stream after hours or over the weekend, plus the other streams I do, because everything is overlaid on what happened previously. The market's a developing story. Our job as traders is to align with it, take the information that the participants deliver to us, make some sense out of it, and interact with those participants when we have alignment with our plan and structured trades that we have vetted. So we only engage when we have a statistical edge. That's the business of trading. And most of us think the business of trading maybe it's a video game or chasing the market around. I'm going to suggest maybe it's a bit different, and that the retail failure being so high, over 90%, is because most developing traders never get to understand the business they're trying to be in. By the way, 66.80, which is a current price, if you're looking at it as an area to observe, and it's not a trade recommendation. We'll come back to that later. We got a lot to talk about, as always. And as always, general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of losses and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. We get there, we'll talk. Don't forget about Bruce's pilot program. You want to build a trading edge? Bruce can help you bridge the gap between fantasy and reality. If you don't have metrics, statistics, and you don't know how to extract them, you're going to be somewhat, as they say, wandering in the desert of trading. Bruce can help you understand how to develop these and also get you familiar with the tools in Bookmap that can help you move in that direction. And of course, like everything, you have to do the work. Who wants to work? I just want to trade. Well, trading is gambling if you don't do the work. So it's one of those decisions we all make at some point in our developing career. Either we keep doing what doesn't work and hope for change, or curve fit and throw more indicators against the wall, hope that works. And the word hope, well, hope does not translate into sustainability. When you're operating a business, you need to know how you get your net, in spite of paying bills. In our business, we pay the opposite, the gamblers, if you will, and or the other traders. The casinos pay the gamblers, but they have an edge. The difference is, are you a gambler or are you sitting on the house side of the table? That's what this pilot program is designed to help you achieve, if that's your objective. Or maybe you have a good time, it'll be wonderful, and you say, oh, you can't make money trading. Well, obviously somebody does. So maybe it isn't about you as much as it is the process. So something for you to consider. Now, if you haven't taken advantage of this, and this is available to everyone in the Bookmap Discord Trader Lab community, and if you're visiting in YouTube, it's available to you all at no cost, as well as the community. There's 60 PDFs of structured trades. Now, I'm not a vendor. I'm just someone who's been doing this for 46 years. So over those many years, both professionally and otherwise, I developed things that I found interesting and I researched. There is no plug and play, regretfully, in trading, or else we'd all do plug and play, move the ATM in the basement, and just go down at the end of the session. It doesn't work that way. That's what we think. And many vendors, of course, want us to, quote, believe that the one thing you need, only this, that, join this chat room, do this, do that. Well, there's no cost for Trader Lab. And that doesn't diminish its value. In fact, it increases its value. So the idea of Trader Lab, it's not about me. It's about you and the other traders that come together to leverage their collective experience. There's data mining going on in there, a lot of focus on the psychology and the mental obstacles of being in a random environment. We all are seeking certainty because we're wired to avoid risk. It's a very logical thing, but that's not the business. So how do we somehow put this together? Well, the way you can put it together is take a photo of your trading companion. Interesting. I think somebody, they have a bullfrog in their pond, and somebody else sent in a photo of a horse. So what's your pet? And I want to know how you have your horse in your sitting next to you, but I don't know. There's a free month of Global Plus if you get selected. And all you got to do is take a photo and drop it on X, LinkedIn, or Instagram, hashtag Bookmap Pets. It goes through the end of the month. You're running out of time. Get that camera out. Now, higher time frame. This is yesterday's behavior. Now, let's go back and look at some important elements. This is the FOMC day. This is a tail. Our outside target yesterday was 66.21. This is called horseshoes and hand grenades. We got pretty close to it, and it set up something called a neutral day. And this is very important scenario because it's a battle between two sides. So when you have neutral, it's just basically, two armies on both sides shooting across. And if you remember what we did yesterday, we opened, we went down, we went up, we took out the first hour's high, then we took all the longs out, took out the first hour's low, and then come all the way back in. That's the two sides. And that set up the possibility for longs for this morning. And then after that, you push your helmet on. Let's look at the key levels. 66.49 is a high volume area. Yesterday, this was the higher time frame retail price. Now, some of this, of course, is going to confuse you. Your head is going to spin, and you're going to go throw your arms up and go running out of the room with your hair on fire. The way to learn what this is all about is to understand the primal function of the market, which is called the auction. And I'm using volume profile as a chassis to overlay structured trades on, so you can learn all of this. And it's, again, this is not where you go, let me spend 20 minutes here and let me get the ATM plugged in. It doesn't work that way. You have to educate yourself, but you can get that in the Trader Lab. Now, this yellow line here is the retail price or highest volume from yesterday. 66.70 is the highest volume for all of this. And the reason volume is important is think shopping. Trading is shopping. So let's get over all this mystique of magic indicators, anchored VWAPs and Fibonacci, Elliott wave. Let's keep going, right? I don't have enough time to talk about the 100 indicators that are in your trading toolbox. I am going to talk about market mechanics. So this is the highest retail price. Shopping, trading, shopping. When it's on sale, price is too low, you throw 4 in the shopping cart. If the price gets too high and you perceive it as too expensive, you won't buy it. We run out of buyers. The market rotates between too high, too low in all time frames. And then the highest volume price is what's in your store is retail. Buyers and sellers agree. So as we move away from a fair price, it cuts off either the buying or the selling. And the auction, if you will, in trading is trying to figure out what's the right price. And in all rotations, it doesn't. We do have a short, not a recommendation, that fired at 80 and just mark it down. I tell you, I almost put the trade on myself, but I was just starting the stream. It's a very difficult thing for me to do. It's a short. And it's not a recommendation to targets around 63. Let's see if that works. That would be from 80 to 63. Just make a note. It's called mean reversion. Underline the word mean. Coming back here, we have 67.01 is a low volume area and a target area for today's longs, and 92. Now, let me roll along as fast as I can. This is yesterday before today's RTH open. This is all on this before today. Okay? This is a low volume area. And if you've been following the stream, these are important. Let me just show you some ideas. Over this day is this low volume area, and this is called a single. This is where the market ran away from a price or an area and ripped. This is not auction. The nature of the market, watch the nature. This is day before yesterday, is to come back and check it. Oh, it's too high. I'm out of here. Now we get another one of these, same as that, and another single. And that's around 67.0650-ish, and this zone. This day, the high volume price, the price of your S&P, where most of the trade was right around 92. Yesterday, we have an excess down here. Who knows? These are outside edges. 81, just make a note of those. 41, retail price around 60. Yesterday's high and then this. Let's keep going. This is now the RTH, I think. Let me make sure. Yes. So initially we opened, and where were our targets? Into the zone in here. And then we start breaking down what becomes the next target down here. See the logic? Maybe? Let's see what else we got here. I don't remember. Oh, and now we got here. So look how the mechanics of the market work. I call this market mechanics. So this was a target over here. And by the way, it's horseshoes and hand grenades. You know, if you get to 28.5 and the thing's sitting at 30.25, I'm okay with that. How about you? Over here, same thing, except it's around 0506. Where do we go? 3 and change, low volume zone. Same thing. What's our target coming up from this morning? Here, which I just showed you. And then if we find too high, where's our target coming back? Here. And maybe lower or maybe not. Who knows? Everybody with me so far? How you guys doing in YouTube? Are you all conscious today? And welcome to the Trader Lab. Please give a like if you're visiting in YouTube, by the way. Supports the stream, encourages me to keep doing this. When I do this, I don't trade, and it kind of gives me the willies. Here's Bookmap. The levels on Bookmap are the same levels I just showed you. Hold on, I got to turn off some export levels. Whoa, hold on. Oh, that's that. Hold on, guys. Gotta. Okay, sorry about that. I got to get these chats back. I kind of lost them. Just give me a second. Okay. All right, we're doing all right. You're still awake? Sleeper cell. Nice. And it's funny you would post that, staying awake. All right, so here we are. Statistics. Grab a pen and paper, take down a couple of notes. You got to vet everything everywhere. Anything you hear here, any place else, you must vet. Who knows, right? This is the ETH high. This is the 92, the naked volume point of control above. This is the one I showed you down below. These are targets. And I'll give you the probabilities. That's that single and that low volume zone, which was the target for the coming up. Now, targets are areas, so you understand there's no precision in trading. All the engineers and accountants out there get crazy over this, because they are wired psychologically for precision, and we don't have precision because of momentum that's created. Momentum either goes beyond targets, doesn't get to a target, or we never get to it anyway. You know, part of the thrill. So we are opening higher inside of yesterday's range. There's yesterday's high. We're outside of value. So if we open outside of value, the possibility is that we're slightly out of balance, and we can do the following. We can go up. I know you're going to like this. Oh, we can go up or down. You don't have to listen to this for that. No, but it means something. What happens if we're out of the balance? Now, the other thing we talked about, and all this is posted in Trader Lab last night, or actually after the close, is the market is short. The market goes up to go down and goes down to go up. It rotates on itself. If the market is short from yesterday, and we had a small gap left open, right? What does that mean? There's buy stops in the market. So we can anticipate this behavior, and this is the behavior that creates rotations in all time frames. So if the market is short, then if we open out of balance higher in range, then we can anticipate, and that's the word, anticipate, not predict, that we're going to squeeze out those shorts. And then either we get additional longs in here and we keep going because we have a weak high at the all-time high, or being Friday and the potential for government shutdown, which everybody knows about, and who knows, you might get, maybe you get a short squeeze and maybe we go back in balance and just float around. We'll see. Nobody knows. So now statistics. So we're opening higher inside yesterday's range. I'm only going to give you a couple of key ones. There's a 98% probability we take out either the first hour's high or low. That's called the IB. And since it's already the first hour is in here someplace, I don't even know where it went. There it is. There's the IB. So IB high, IB low, IB low, one of them. Pick one. Do you feel lucky, as Dirty Harry used to say? Taking the previous high or low, 82% probability. Getting to the overnight volume point of control, which is here, and is 81%. Getting to the ETH high, 76%. Getting here, high probability, retail price from the day we fell out of. Getting up here, because it's low volume, good probability, not statistical, structural, and settlement, this. And the probability of getting there, 68%. There's more, but that'll keep you going. Is everybody with me? And there's one more. Getting to the value area low, 55%. So, and this. This 49 is also a probability, and it's aligned with that. This is mislabeled. It should be something else. MCHV. Same difference. So those are the targets in the intermediate time frame. So we can be trading towards targets. Now, a target, as you know, is a probability, not predictability. Very important you understand in trading, we can't predict anything. So you're not in the be right, I know what's going to happen business. You're in the maybe business, business of maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do anything. Maybe I only get involved where I have an edge and I understand the condition aligns with my trades that have a statistical edge, and maybe I'm not playing a video game. Maybe I want to actually be in the business. Maybe you're going to take stops like the rest of us, or maybe you're going to spend all your time and energy on squeezing the risk out and becoming certain. If you can't be certain and you can't squeeze the risk out, then you're going to have to accept something different, and you're going to have to solve for something different. That's randomness. If you can't, randomness is what you have. The market's 100% random 100% of the time. How can you solve for, get certainty in randomness? You can't. So don't try to solve for something you can't get. Now, you don't have to take my word for it, but it might save you a couple of years. For me, it would have saved maybe 10 years or more trying to solve for certainty. But there wasn't so much the certainty. It was more get rid of the risk. And that is a need to create more certainty. So I went on the quest, remember, heard of the Crusades? I was on a crusade to squeeze risk out. And I spent a lot of time, a lot of energy, dollars, and a lot of other things, resources on building systems for squeezing risk. And this is after many years in the business. So I went on that, and I didn't understand that my primal need was to avoid risk. That's our primal wiring. Decisions are made based on a subliminal or a DNA or primal wiring. You make decisions you don't even understand because you don't understand yourself. And this, when I mean that, I don't mean who you are. It's what drives decisions. And it's the things that have helped us over millennia to survive. Avoid the saber-toothed tiger. Be certain that I'm not going to get eaten by the apex predator. All that. Well, this is the apex predator. That's how our subliminal behavior, our primal wiring interprets this environment because of the randomness. Well, if you're in a state of fear, which you are because of uncertainty, then you're going to try to solve to alleviate that because that's how you're wired. Anyway, first trade. Now, this is what I'm showing you is in the 60 PDFs that are available to all of you in the Trader Lab. And by the way, there's a link in the bottom of YouTube if you want to visit Trader Lab. There's no cost for it. It's a great community, but it's serious. It's business. It's not romper room. And I know there's a lot of chats and it's ridiculous. We don't have time for that. And it doesn't matter how long you've been trading. It doesn't matter what you do. What it is if you want to either improve your game or if you're working hard but waking up in the same place, I call it Trader Groundhog Day. You may say, well, maybe it's my process, not my intent or my effort. That's what conclusion I came to. I was working as hard as anybody I know. This is what I did. And I couldn't figure out why, in spite of the winning trades, that I was not getting sustainability. I was up and down it was a roller coaster, but there was problems with it. So I thought, my solution was let's get the risk out, but that was the wrong answer. So I didn't know the right answer. There were no off-floor traders when I started. It's all my buddies were all floor traders, and they thought I was crazy. Now looking back, they were right. So anyway, here's a buy sweep. That suggests the downside rotation. This is RTH open, 8:30 Central Time, my time. Now I made this up. What I'm showing you is I created for myself many, many years ago, and it was a very novel idea at the time. Nobody was doing it, and the purists in market profile world, which is where I started in the mid-'80s with Peter Stottlemyre, he taught it to me, he created it. He was a grain trader over at CBOT, so I knew these guys, and it was, I won't go into the story, I'm just going to say is I was fortunate, but also unfortunate. I was fortunate because I learned what ultimately would be the tool that superseded all other tools. What was unfortunate, and this has nothing to do with anybody but me, is I also was exposed. I worked with George Lane, who created stochastics. I shared an office with him. And I saw oscillators, and they were early back then. So I had oscillators and all the other stuff, the standard stuff that is in a software package, and it was all new. So I was pretty excited, and I went down the rabbit hole of oscillators, and I started mixing it with market profile, and that was a recipe for disaster. So, and I didn't know that at first, of course. So anyway, coming back, too high. I call this a variable high volume node. What does it say? This is the language of the market, guys. I don't use any indicators. What I do is I read the shopping. So we're all in our shopping carts in the supermarket for S&Ps. If the price is too high, don't forget, sweep suggests counter rotation. I'm not paying that. And how long is the market open? 1 second. And I don't know. It shifts here. This is the new retail price. What makes a retail price? Volume. Buyers and sellers, buyers and sellers, buyers and sellers. What happened up here? There was some volume, but we'd left it. I'm not paying that. Micro. Now, this is happening like as fast as anything, 6 seconds. This is not a place for anybody to trade unless you've really got your stuff together. And I always say in Trader Lab, it's a specialty. It's not mechanical. It is a specific, nuanced, advanced process. I'm going to show it to you, but these are not recommendations. It's in the 60 PDFs, but you don't just pluck one of these things out and say, oh, I'm going to trade it. It's that is the choice of ruin. So what do we know? Yesterday's high, stops are above us, right? We had a gap open, right? We know that. Okay. So what am I thinking here? I'm thinking I want to get long. That's what I'm thinking. Too high. Sellers. So what do I know? Sweep, sellers. First retail price. Too high. What do I know when I come back? I'm not paying that. I won't pay it there. I'm not paying it here. And I got my sweep. You know what? Retail. Resistance, retail. So what the market does is it rotates. And what it's searching for is too low, too high in all time frames. I mean, this thing is, a couple of points. Retail. If this is too low, this is resistance. And if I get through here, then north. But what do? I don't. I come back here. Now I rotate back. Now I have microstructure and resistance here. Now this is with the benefit of hindsight. Now I don't know what it's going to do until after. Now what I know is too high, too high, too high, retail. I get under here. Where's too low? Great question. I don't know. Let's look. I'm in balance. I'm going, what's going to happen? I do want to get long, but I don't know if we're doing the Acapulco cliff dive. How would I know? I can't. Watch. New retail price. Variable high volume node. Yes. Very nuanced, very advanced. Don't even think about it. Just think about the language. This is a foreign language. You guys use indicators. It's like Google Translate, right? I'm doing something different. I'm not using indicators. I'm the translator. I understand when I see green delta and it doesn't go up, I got absorption. There's your seller. I know here I got green delta and alignment with too high. I got a seller, iceberg. So passive sellers. You have aggressors and passive sellers. Market orders, buyers, and buy stops are aggressors, market orders. Notice I move lower, more volume. What does that tell me in the micro? Going lower. That's what it tells me. Can't do anything. Sitting here going, huh. Oh, it's going to zero, Tom. Oh, forget it. Glad you didn't take that long. Going to zero. Forget about it. Uh-oh, what's this? New retail price. Watch. Now, two possibilities. And I'm spending my time. This is a very advanced trade, but I want you to understand the first trade because I talk about this, of course, in Trader Lab, and there's traders that take this. Let's come back to the language. New retail price. What do we know? Too high, too high, retail, retail, too high, new retail price. And what do we think? What happens if it's too low? How would we know that? Well, we don't know it until we see the behavior. Too low. So what we found was we have our sellers. Now we have all our volume here. What's going on here? There it is. Then what? Break high. Uh-oh. This right here sets the long up. And again, watch. How do I do this? What do I know? Micro. Too high. Too high. Too high. Right here. Too high. Why? I broke away from it. What about this one? If I did this, more south. When I break above it, too low. Now what happens here? What do I know? Retail. Break high. Where do I pull back? Right here. Too low. Break high. Micro structure. Shift. Support. Support. Long. Stop here or under here. And then longs. That's a structured trade in the trailer. Now, yesterday's high. What was the statistics? I didn't give them to you. Apologies. 82% probability take out previous high or low. What do you think? And there's more. Really? Yeah, there is. ETH high. You remember that one. 97% probability to take out ETH high or low. We can certainly take out both. On its own, the ETH high has almost a 77% probability. Remember, you got to vet these for yourself. Next target. VPOC migration. Watch the language. We're going to label this. Follow the yellow brick road. Remember Wizard of Oz? This is the yellow brick road. Of course, the thing about trading is not mechanical. But let's stay focused here. And if you have questions, post them. All I'm showing you is one trade. And let me ask you a question. If you vetted and understood, and this is one of the more advanced trades I share. There's others, of course, that are, I think, more, the word simple doesn't apply here, but more structural. This doesn't have structure on the open. You really are kind of on the tightrope with this because you have nothing. That's what makes it so hard. And it's fast because there's volume running through. That's why it's the last trade developing traders should learn. But look what we have here. Resting liquidity, ETH high, and this is the next target. VPOC migration. What do we know about VPOC migration? Oh, too low. Retail, new retail price. Now, resistance is here because it's liquidity, target, and target. So let's see. Now we rotate under. This sets up a condition called mean reversion. Underline the term mean. Yeah, Archer, does it work for stocks? Yeah, this works for anything. Anything. ETH. ETH. ETFs. Swing trading. It's all the same. The market mechanism is the same. All I'm doing is using different time frames as you think of it. And the way to think about this, since I am trading a multiple time frame, is they're inside each other. Remember, we're going here and up there. Too low. Now, for me, I'm just telling you me, not saying this is a good idea. I just trade the targets. I've gotten over this. I got to get all of it because I never have been able to. So I look at a target with a high probability and I trade to targets. Now, depending on, and I'm only talking about me, and in Trader Lab, just so you guys know, I always talk about a minimum 2-lot configuration. Now, you're going to go, oh, a 2-lot? Believe me, you got to start somewhere. If you can, the idea of a 2-lot, you understand, is that the first contract, the job of the first contract is to buy the stop on your runner. So the worst that happens is you scratch and your broker sends you a dozen roses. So what that does for you is it helps you manage the lunatic under the hood, who I call Hyde, Jekyll and Hyde. Hyde's the one who says, oh, I better get out now. Oh, it's going to stop me. All the crazy. When you are risk neutral, you're going to have emotion. The thoughts will come, but you'll offset the thought, or that emotional primal wiring, run from the saber-tooth tiger, avoid the risk. FOMO is risk, and FOMO is get in when it's running away and get out when you think you're going to give it back. That's function. It's the same function of running from risk, you see. So we all feel it. So you're still going to have the stimulus, but when you're risk neutral, it gives you a tool to go, yeah, I feel it, but the heck with you. I'm not listening because it doesn't work. But when you're all or nothing, you're being managed by your emotional stimulus, not by any kind of plan, you see. So that's why 2-lot minimum. So if you're running this trade here, you could be risk neutral, stop goes wherever, structure says, and then you hang out. Because statistically, right? What was that probability? 98% that you take one or the other. And considering the market is short from yesterday, that's the condition of the market. You're going for this. And if you got a runner, you're going further. I don't know. Just the way it is. Remember, the short I talked about, I asked you to write down right around 10:30 Central Time. And the target was 62-ish. Where did it go? From 78-ish to 62. That's a structured trade. Remind me to talk about that one. If you're in Trader Lab, that's your trade, if it's vetted. So, VPOC migration. Oh, going to the moon, Alice. VPOC migration. Oh, my goodness. Happy days are here again, except. And where's our target? Remember, the low volume zone. So I showed you all at the top of the stream. And, when you're looking at this stuff, and this was that single, remember, where the urgency was, and that created the zone. So this is my target if I'm running, let's just say, a 3-lot. And by say target, there is no such thing as a rigidness. This is a fluid business. Now, using a high-tier order flow tool gives me edge. Let me show you some ideas of edge. Right here, VPOC migration, liquidity. This suggests counter rotation. Bounce high, and these guys, this is the icebergs, they're doing their thing, holds. What does that tell me? There's buyers here. They were absorbed. These guys are absorbed. These guys are absorbed. This is absorption. So I got my buyers here. Now, I wouldn't initiate here. I'm already in, forget. So here I get a buy sweep. That suggests the counter rotation. You could be out of this thing here if you're running your 2, and that is your target. You see, you'd be done on a 2. Up to you. I'm just saying this is what I would do if running a 2. If I'm running a 3, I'm going for the next layer. You see? So I just trade the levels. So let's talk about it. Let's assume I got a 3-lot. Just for fun. And I do trade with more than 2, but that's not relevant to developing traders. My objective in starting Trader Lab is to I have sympathy for developing retail traders, because I go back and look at what it took me. And nobody should do what I did. And now the problem I had, there was no information, no internet, no PCs. We had a chart book once a week, and by hand, I would write in every day, open, high, low, close. We didn't have candles. There were bars. That's how I learned classical bar charting. Sweep. So this right here, this is a big deal. Where am I? Location, location. This is also a location. This, and it's 6,700, so you got all this stuff lining up here. There's a strike price, So right here, sweep. So if you're sitting long, here's what we know. If you're long, what do we see at the open? A sweep. What does a sweep suggest? Counter rotations. Buy sweeps. They're at outside edges. What is this? Buy sweep. They're at outside edges. Do I know it's going to be the high of the day? And it might not be the high of the day. I have no idea. What do I know? Counter rotation. What are my choices? I can exit, probably here. Me, not so smart to be able to know anything other than in hindsight. This, let me show you something a little interesting. This is fun facts to know and tell, and part of understanding Matryoshka dolls. Did you know trading was a vertical integration of time frames? Yeah, you did. But did you know they're like Matryoshka dolls, that they're inside of each other? And did you know that when you look at structure, that the auction is happening in all time frames, if you will? Let me show you what it looks like so you can recognize something. The mean reversion trade I just described to you that started at 10:30 Central Time is the same as this, except this is in a microstructure. Very interesting. So sweep, excess. Sellers are here. Buyers are here. How do I know that? I got a buyer here. Why isn't it going up? Because there's a passive seller. This iceberg. Don't know. And why didn't it go down over here? I got my buyers here and my buyers are here. Resistance, support. No clue. Why wouldn't it just keep going? I don't know. Here's where it changes. Break low. So now what I know is in here is the volume, and this is an auction, micro. I'm not paying that. Yeah, but it's on sale. Retail. Think of this like your convenience store. Saturday night, I got to have a pint of ice cream. You'll do anything. It's $8 a pint, though. And of course, like me, maybe you're the same. My teeth chatter if I pay $8 for a pint of ice cream. But I buy it because, there's no line outside the store for my ice cream or my S&P here. And then the buyers leave the store. Now, this is the same as that, except this is for the whole day. So this represents the volume for the whole RTH session up to this point, and this only represents the volume in here. So when the price is too low over here and we leave it, and the price now moves up here and it's too low and we leave it, and then the price is up here and it's too high and we leave it, we now return here. If this is too low, we'll come back here. If we don't get through it, hasta la vista. If this is too low, that's too high, and this is too low, and now it becomes too high, I'm going to come here. Okay? So this, no clue. Here's the clue. Sweep, break the structure, and this is the kind of like the last spot. Okay? So for this one would just get taken out, on a trailing stop or however you manage to trade. When you come under here, this is trouble in River City. Now this right here is a possible long. I want to show it to you because if this is too low, let's use some logic here. We have a structured trade in Trail Lab called VWAP, the VPOC, and then it would be back here. Okay, so let me just back this up so we can see what it looks like at the time. So what do I know? Too low, too high, too high. If we're just rotating, we can come back. This is a mean reversion trade. It's the same trade I just described to you at 10:30 Central Time, except you know, thinking the trend might be up. Now we have to look here because this is where trading, of course, is random. This is a sell sweep. That suggests the possibility to come here. Now, let's look very carefully at this behavior. And if you took this trade, you would take a stop. That is okay because that's trading. But I want to give you a little further insight. Notice we're coming down. This is the sell delta. Selling, 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 selling. Big selling. Now, why isn't the market going further? Absorption. 2,000 icebergs. So you see what creates this. And this is aggregated. In other words, I don't want to see 11110. I just want to see the big number. I'm more focused on the delta and the sweeps and the order flow. I know the icebergs are always in here. And I want to see, just kind of, oh, there's a big number. That's why this is here. Now, this is my right here. I got to put this in here for you. Isn't important. So this is all important. I got resting liquidity. Okay. So what is this? Now I'm going to add another component in, and I can't cover everything. What happened here? This liquidity supported the market, right? So let's call that support. Now, and I'm in an advanced thing here now. I can't give you all the pieces, but I want you to see that you can learn this in TraderLab. So that's support, right? Notice the buyers are here. There's the icebergs, and there's the absorption. There's the move up. All right. Sell sweep. What does that say? Up. And then you know about the buy sweep. So where's my location? It's here. Right here. Here's my VWAP. Here's this. So this is support. This is all a potential long right here. But let's look at it very carefully together. I'm going to take you now into microstructure. I was looking at this, and we had also Michigan, the revised UOM, University of Michigan. It's kind of a big deal. Not a big deal. The pre is a biggie. This is, but it comes out at 9 a.m. So I was looking at the retracement come down, saying, well, maybe they're getting out because of this report, flattening out, evening up. All right. Where's my next trade? It's going to be here. What do I know about this? Support. What happens here? Sweep. What am I looking for? A trigger. So I'm right here. I'm going, Where's my trigger? Break low. Now, choices right here. Short there on the retracement here. And this is an advanced method. Now, let me show you a little more structure. And I call this structured trades. So I got this level, and now I have this. What happened at the high of the day? Let's come back. I'm not paying that. I'm out of here. Who knew, right? Anyway, now let's look at the behavior coming from the other direction. Where's my long? It's here. Where's my location? Where's my volume? It's there. So it's chop, chop, chop. What am I looking for? Break high, test, long. What do I get? Chop, chop, chop. Break low. And now what's resistance? That up on top. What was resistance coming from the other side? It was the same thing, except here I'm looking for the long because it's a structured trade. But I get a trigger going the other way. What does that say? Well, maybe short. And this is support. So if you get short in here, you're scaling here, and then it's opening swing low. Because the longs now who got in are under the bus. And where are they, you ask? Under, where were they? Opening swing low, I lost it. Hold on. did lose it. Trader Lab, what was the opening swing low? Because we took it out. I just don't remember. Oh, yes, it was 67.50, wasn't it? Is that right? Somebody confirmed that? Okay, 67.50 is the target because the longs, where's their stops? Right, our long was right in here. Stops are here. So everybody, remember, the market goes up to go down. The market goes down to do whatever it's going to do to you, because it's random. So if these guys get stuck, then their stops are here. So once you get on the short, which would be here, and there's other entries for it, you're going back here, and because of the opening swing low, out the bottom. And out the bottom is to pick the stops. I call it a stop pick. Let's look. So you get the stops out. And what's this target you're asking? I know you asked. And what was the probability of getting there? I know you wrote this down. 68% probability. Do we know if it's going to get there? No way. But once the barge gets turned around here and we lose the VWAP, then if you're long, think about how you think logically here. You're sitting long, you're having a wonderful time, you got primary targets, and you came up into this next target. If you don't know this because you don't understand how the market works, and you're just letting your spaghetti do the driving, all I can say is I hope that works. I don't know. Doesn't never work for me, so I don't do it. And I don't use indicators. I use order flow and an understanding of market mechanics. And I use this because this is telling me this is shopping, guys. If you know how to shop, you know how to trade. The difference here is time frame. That's all. So in the store, they don't change prices. In here, prices are being advertised and changing every moment, every second. And all these rotations are shopping experiences. It's an auction. Oh, I'm not paying that. Yeah, but it's on sale. You got to be crazy. I'm not paying it. I'm not paying it. And down we go. See, these are all shorts. These are all trades you can learn and trade with. But I want to go back to the 67% probability. Take out the 67.5 opening swing low next target. This is your target. Trade could be done right here. And the short would have been, I forgot, there or here. Let me show you this. I'm going to show you another trade. And these, you can learn these. This is not a big deal. It's just random. So the way I kind of think of it is, I don't know what's going to happen. So I'm not concerned with it. I'm concerned with alignment and narrating conditional change. Right here, it still longs for me. This changes it, and then it turns into shorts. That's it. Now, let's say I'm here with my jaw on the desk, and I don't have this. I'm not able to enter here. Maybe it's not my vetted trade. I don't know. Now, let's look. Let's come back before any of this happens. What do I know? Out here, this is too low. My high volume is there. Too low. And off we go. Now, as I start coming down, this is the structure. All of these little high volume areas, I'm not paying that. What about here? Nah. What about this one? Breaking away from it. What about this one? High volume, retail price. Get out of here. And now I'm breaking down. So now I can't get short. As a developing trader, I don't have this trade vetted. I don't even know what's going on yet. But now, once I start breaking down as a developing trader who doesn't have this trade vetted, I'm going crumb. I got to get short because I can't get long. Where am I going to do that? Oh, no. Let's look. How do we do this? The Acapulco cliff dive. What does it tell me? Here's an outside edge. And now have volume here, and I'm going, to abuse everybody. How can I get in this, Tom? I ask myself the same question every day. But I'm saying is, well, I got to wait. Where's my outside edge? It's here. Too high, too low, retail. Now, right here, this is full session VWAP. So it's a VWAP. That's a VWAP, RTH, full session VWAP. And what's that? Where to go? Down here. Whoops. It's a VPOC. Advanced concept. VWAP to VPOC. Failure. Failure to naked volume point of control. No entry. Rotation. Full session VWAP. Break. High volume is in here. Let me open it up so you can see it. Outside edge, no clue. Sitting here with the jaw on the floor, not even on the desk anymore. What do I know? Sellers are here. There's the buyers. That's the absorption. Only good in hindsight. Sellers are below the buyers. Too high. Sellers are in control. Sellers are in control. And how do I get into this trade? You're asking. Here's how. And this is structured, guys. It may look like, madness to you. It's structured. So what do I know? Chop chop is a consolidation. Outside edge is there. And the buyers are here. The volume is in here. Show you again. So sellers, buyers, and it's called a consolidation. In the profile world, it's a shopping thing. You got to be kidding. Yeah, but I like the price here. Put 2 in the cart. I'm not paying that. I think we can get it lower. Retail. Chop, chop. Trigger. Resistance. Retail price. Watch. Short. Where to, you ask? Where was it? 67% probability. Another structured trade. Another entry. So here's what you got. Break, trigger, short there, or short there, or short there, or short there. To where? Resting liquidity to there. And that's all you need, right? Would you be okay with that? That's a 13-point trade, not including the scale to get risk neutral. Your stop would go above here. So you would enter here, 75, and you got to have your stop there. Or subject to your plan and your risk tolerance, it could be over here because that's your volume point of control in this structure. Let's remember, I'm not paying that. Yeah, but it's on sale. Retail. If I break and test and I now know what's too high and I can sell this, I can put my stop tighter. Not here, but a little right above here. But it's, using a shoehorn. But now you're in at a palatable risk. And your risk reward is still pretty darn good, I think. You guys with me? So here's what we had. The longs, this, C'est la guerre, it's a short if it's vetted for you. If not, this is the next short. This is the target. So for me, this is a short or nothing. This is definitely a short. This is the target. All I'm doing, let me show you what's going on here. This is the same as that. If I find too high, then I'm going to go back to what was potential. And I say go back. It's not like it will. It might. What was too low. If this is too low, I can leave it and come back to what was too high. Does that make sense? VPOC migration. What is this? Let's talk the language of the market. This is my new retail price. Really? Yeah. What do we do with this? Let's come back to statistics now. And I got to label another thing up here. Because this is material. If we come back, this is going to be a target. Watch the behavior. Where are we here? Anyway. So 95. Maybe. Let's watch. So too high, target, VPOC migration. Remember the behavior. If I break high, I'm going to counter rotate. Where's my outside edge? It's going to be out here someplace. There's something else you need to remember. What is the probability of taking out the first hour's high or low? It's called the IB, 98%. One of these guys are going to get taken out. It's two-sided trade. We can take out one, we can take out both, we can do anything. So that part, no prediction. What's the probability of taking out the first hour's high? 66%-ish. How about taking out the first hour's low? 62. I consider that like even money, but I got my primary target. Now let's look. New retail price, too high. Also, what's this? Too high. Areas. Let's watch. They're just areas to observe. And this is the one I think I was telling you about this. This is mean reversion. Where did we come? I'm not paying that. Yeah, but no, I'm not paying it here, and I'm definitely not paying it here. Let's sell this. This is our sweep into a level, and this is reversion. So this is a short to there. Is everybody seeing this trade? That's mean reversion. The short from here, reversion. The short from here, reversion. The short from there, reversion. How you guys doing? How you guys doing in YouTube? Is this making sense? This is the Trader Lab. You can learn this. I'm not saying you want to. I'm not saying you should, but I am saying you could. And if you think this makes sense, now this might not be what you want out of trading. Many of us come in, and I had no idea when I started out. I thought trading was, this to this to this to that. Oh, I got to get long here, or oh, I got to sell this. It's going to go to wherever. I don't know. It's not. To me, trading to me, and I'm only talking about me. This has nothing to do with you. I'm giving you a sense of philosophy. Why am I trading? Is it to fulfill dopamine and adrenaline junkie, or am I looking to be in business and sustain it? How do I create a sustainable business so I can do this every year, every day of my life? And I can get up every day enthusiastically looking for what is going to unfold because I don't know. I am an intellectual strategic pursuit. How do I get paid? It's not every time. If I stop and think about it, instead of thinking of greed and action, if I think about potential and profitability, I'm going to take less trades for more range because I'm going to take stops. So if I'm going to put a trade on, if I get short here and I can't sell it here, what I know is this is a sell structure for me, and I got my VWAP in this. So this is my area. There's my icebergs. Who knows? And here's my sweep. Here's my micro high volume structure. Yesterday's high. So I'm inside of yesterday's range, right? This is my short. And there's where I'm trying to go. And then after that, it's trade management, or you could just take it from there to there. Does that put, does that put food on the table for you? Watch. See the change. What was too low? Isn't it here? Right there? Whoops. Right there. And then I was telling you at 10:30 there was another short, right? So I'm going to catch up real quick here. So 9:30 IB, we haven't taken either one out. Say Laguerre, pick one. And where was our last trade? I think it was 75, right? Right at 10:30. Yeah, this is the one I said, make a note of this. So this is a short, and you're trying to go there. There. I think that did it, didn't it? There. Now, there's no precision in this, guys, and I don't put my my exits right on here. I put them 2 to 3 ticks. Now, let me give you another little thing. You see this? When this happens, this is when my teeth chatter because it's saying it's too low. Okay? But I'm going to draw a little line here, a variable high volume node. This is my target. So this trade, which was 10, wherever it was, here is to there. That trade is over. Okay. So I just, and what makes this trade a little problematic is this. So when this happens, if I'm not risk neutral, I will tell you, I get very uncomfortable. But the business discomfort is part of the business because of uncertainty. So I go, maybe I'll get stopped out. One of the things I always say, and I think a lot of traders wonder about this, when I put a trade on, I assume I'm taking a stop. And what it is I accept the randomness, and I also accept that I'm placing a bet with an edge. But because of the randomness, I have an equal opportunity on that one trade of being stopped out. Not over a large sample size, because I have an edge over a large distribution of random events, but not this one specific one. So I make the assumption mentally, this is going to be one of those ones I get stopped out on. It helps me psychologically accept the randomness. I don't go like, oh, this is going to, because anytime I think something is going to happen, it is only feeding my need to be right and to be predictive, but I need to accept that I can't predict. And it's healthy for me mentally. And this might be too nuanced for some of you guys, but these are things I at least had to do for myself. Anyway, this is the short to there. And that was the one I said, make a note of this. Now this I haven't seen. I don't know anything. Too low. Let's see now. Well, we're definitely in two-sided trade, and we have the IB stats open. So this and the one below. I couldn't tell you. Now, for me, if I don't have a trade, I just sit and wait. What am I doing here? I'm not like going, should I buy this or should I sell that? I don't have a trade. I do have an area to look at right here. So this is called double distribution. So I have this to this, and then this to this. The area, the outside edge is right in here. Here's what's going to happen. We're either going to come back here. Okay, so here, or we're going to come back up to the top. And I'm saying it could do either because it always could do either. But the structure with the high volume here suggests this. And these are not recommendations. It is two-sided trade. So what are we trading? The primary trade I suggest that developing traders learn, to me it's like bread and butter every day. It's called mean reversion. This is the mean. This is the reversion. So, and I don't call trades. You don't need to take my stops. What do we know? Remember, we don't know what this thing's going to do. What do we know right there? What do we know? What do we know? Tom, what do we know? Sometimes, listen, I'm always asking myself what I know. What I know is this is too high. I know this is now the retail price because of the high volume in this distribution auction. There. See the high volume? That's like a volume point of control. It's the same as these, but this is like trading in Matryoshka dolls, Russian dolls. This is too high. I'm out of here. Then we do this. What do you think of this rotation? You got to be kidding. Let's leave. What about here? Oh, it's on sale. If we leave it, then we do the auction going this way. Ching, 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 ching. Oh, too low? Now we start coming back the other side until we get back to too high. And now what do I get? I pick the stops here. My liquidity comes here. I'm at an outside edge here, and there's no precision, and I get a short. And where am I trying to go? I'm going to the volume point of control, wherever that thing is. So I have to stay under this, or else this trade will take a stop. So the idea of this trade, and the thing is that's hard about this right now, we're in two-sided trade. So I have this as a potential return to there. I have this, and I have this. This is the more important one. So let's see what it does. And again, if this isn't your trade, you're just sitting in, you go get back in your hammock and wait for your trade. Is everybody tracking? You guys have questions? Post them. Yeah, Mark, I created the Trader Lab. Yeah. A lot of traders were asking me what I was doing many years ago. And so I posted stuff. Hold on one second here. I have a little problem. Let's see if I can get this working. I'm trying to get some levels exported out of IRT now, so you can we can see on the chart where these high volume and low volume nodes are. So you'll see them. So the thing that you always have to be, at least that I think about, is risk management. So I'm not. I'm really just someone. I'm risk adverse, aren't we all? So when I put a trade on, it's got to have structure, and I need range to try to get risk neutral before taking my stop. I take stops all the time. I don't like them, but casinos seem to do okay paying the gamblers. They can afford to give you the cocktails and the ticket to the buffet, And I know I'm in two-sided trade. I know it, and I have a high probability of taking out the first hour's high or low. I suspect it'll be the high, but it's just a guess, The reason is that we went up first, squeezed the shorts. Then we threw the longs under the bus. Now we have new shorts in the market. Now we're going back up to squeeze them. So I do think we're going to come out the top, and that's the same behavior as yesterday. If you remember yesterday's behavior, we opened, we went up first, looked like we were going north to the targets that I showed you this morning. Then instead we went down, took out the longs, got the shorts in. Then we came back, and then the shorts got thrown under the bus. Two-sided trade. We got the same condition today. That's a market that's in balance, so it's two-sided. So when you know the condition of the market, you really want to try to think about always who's on the other side. So this trade here, if you took this trade, this is probably going to end at a stop. It looks like it. And this would be the target. If it doesn't go there, it's going to squeeze. Let's look. And I'm above this. So this is really a dividing line between distribution. So if you can't get back down here, then there's nothing going on. I wonder if I've read that wrong. I'm just looking at this structure. I'm going, why would I be selling this?
We have sellers at 66.85.
This actually, not here. I think I misread this, guys. This is the dividing line of distributions. The short was here, right, to there. And now if you come out here, it went too far here. So this is an error on my part. This is not qualified. The reason is that you're out here. If it just pickled this a little bit, but see, this is a good short. This one, not good. No good. If I took this one, I'd take a stop. Or if I put it on, let's say I did put this on, and this is really where I got to stay below. This is not a trade I would think. This trade is really a little bit twisted because this is my outside edge, but I'm above this. So there's conflict in this trade. So this is not qualified. I have pieces, but I have pieces. This is resistance, okay? So I can look at this as resistance, but the structure is over this. So I'm using multiple pieces. If I sell this, which I wouldn't, because we already did, you see, we already got this trade and we found out what's too low. If I have too low and I cross over this, I know this now is too low. If I come outside, I have stops here. And if I get outside the low volume node, then this whole thing is too low. And then I can come back potentially and roll around in this. But my resistance is this. So I wouldn't be taking this thing. I'm just not bothered with it. Doesn't matter, by the way, because right here, it's sort of, I might come back here, but the market, I have to go back and look at our shorts. Because it may work its way here. So what I want to say is some traders could take this. Let me put it that way. But you got to know where your resistance is. It's right there. Okay? So if somebody takes this, I consider this extremely aggressive. Because there's conflict. That's the only reason. Because you're out here. And that's your resistance. And since we're out here, we're leaving all of this behind. And then we can come back across. That's all this is. So the profile is saying too high, too low, retail. Okay? If this is too high, I leave it. All right. Now it's the same thing. Too high, too low, retail. There's the yellow line. But when I'm out here, then the possibility is to start this thing again and come back up to these areas. So there's no short here. Okay? Not a place to trade short. I hope that makes sense, guys. Are you following? Coffee. Yeah, thanks for the question. Do I think CVD gives an edge? I don't use CVD. It's a lagging indicator for me. I mean, it's an indicator. I want to be here. In other words, I want this. I don't need this. I don't know what this is going to tell me. What the delta is green over here on the CVD, which is just what's on the screen, but the delta is red overall for the session. In other words, that doesn't tell me. For me, I don't use it. So I look more at what creates the delta, because this is delta here too. These bubbles are delta. That's what it is. So the delta here, when I see selling right here, and I know there are sellers there, that gives me the information I need. I can take a short here. So I'm not waiting on this thing because this is just cumulative. I'm trading the rotation, so I don't use it. And if I think the market is going to go up, this isn't going to tell me up or down. And I'm only talking about me. It's not that you can't use it, traders use it. I'm just saying is I try to work in these when I'm entering a trigger, I'm really trading on top of this, which is a chassis. I think of this as a chassis. So when this condition changes, then I can't take shorts here. And it's not because of anything that's happening over here. It's because of what's happening here and here. Okay? I hope that, I mean, it doesn't tell you, does it have an edge? CVD on its own, there is no edge without a consistent anchored input. If you want to think about this, the way casinos operate is they only play games with exactly the same way, and that's called an anchored input. So there's no variation. What does CVD have to have for you to always use it exactly the same way, along with whatever other inputs are required for you to put a trade on? That's the only way you can measure it. So if you have any variables in the inputs that for your decision process that qualify the trade, sometimes it's this, sometimes it's that, and that's why indicators don't work for retail traders, because it's kind of like the smorgasbord of technical indicators, and it's a little of this, a little of that, and maybe sometimes this and that. I mean, that's just gambling. And there was an old saying from the early days of computers that we had, garbage in, garbage out. So think of it this way. If the environment's random 100% of the time, because we don't know what's going to happen and who's going to do it, right? Tweet, fat finger, doesn't matter, anything. So that part is random. If we have random inputs in a random environment, we just have noise. We have garbage. If gamblers play their cards randomly, the cards come out of the deck randomly in a casino. So there's all this randomness. What's not random is how the casino plays the game. That's anchored, you see. So they can measure with all that other randomness that's taking place, which they don't control. They measure the part of the equation that they control. And over time, does that give them an edge? You see? So in our business, we got to take the randomness out of the front end, the decision matrix, if you will, and then have qualification or conditional processes that tell us what to do or what's qualified. For example, is this short qualified? No, it's not. So there's no short. Is a long qualified? Not necessarily. What is? Where's your trade? No trade? Nothing to do. Hang out, be a tourist. We're in a rotational thing going on here. And we can rotate. I mean, but I look at this and I'm going, do I want to trade in, it's like running across Madison Avenue in Manhattan or Park Avenue with during rush hour. Do you feel lucky, as Dirty Harry would say? I have no trade here. So my conditional statement is, if this, then that. If not, then what? If this is too high and I cross above it, if this, then I'm going to do that. Well, if not, then what? Then up. Now what? Do I take shorts? No. Do I take longs? I don't have one. So what do? I wait for my next trade. That's it. And if I don't have one, I'll sit here. How many trades do I need a day to be a sustainable, profitable trader? I'm going to take stops. So I have to manage my risk, and I have to use my probabilities and statistics that I've extracted. When I have extracted statistics, I'm still going to be psychologically triggered and fearful, right? Wiring. But because I can open my trade book, trade plan, to this specific condition, and I know what qualifies the trade, and I know where the trade, when the condition of the trade is, wherever it might show up, let's just say it was going to be here, I know now I'm going to stalk a trigger. If I don't get the trigger, then I don't have a trade. If I take the trigger, I have a trade. I'll either take a stop or I'll get risk neutral. And because I have a statistical edge, I'm calm and confident in my process because it's vetted. My fear is managed because I have an edge. I'm not making it up where I'm going, what should I do now? Should I get short here? What should I do here? If I don't have a trade here, I'm not doing anything here. I'm just a tourist. I'm going, that's nice. What does it mean? It's nothing for me. So the edge which is tangible. Think about this. You either have something tangible, which is objective, or you have your emotions, which are fear and greed. And I call that the lunatic under the hood, hide. And some people call it the monkey brain, but it's the same thing. It's like you're now only responding to emotions. Oh, I'm going to get stopped out. Oh, it's going my way. I'm going to sell here. Oh, I'm going to bail. You know what I mean? We've all done that. So what is that? That's because we don't have an edge. So if we don't have a statistical probability that we can touch, tangible, then all you have is emotions. And that's where you become a lunatic and you go out of business because that's what most retail traders do. So we have to understand why retail traders fail and use that understanding of ourselves and other traders who are behaving the same way as we do because that's primal wiring. Reverse engineer that, understand it, and then solve for it in a random environment. Does that make sense? Anyway, how did that go from CVD? Nani, why not IB high? I don't think I said that IB high. I think it could do either one, and we're in two-sided trade. It could do either one. It could do both. We had a neutral day yesterday, Nani, and getting 2 neutral days in a row is not unheard of. The probabilities go down, but it happens. Most of the time when we see neutral days, we get, I don't want to, let me take that back. I got to retract that statement. Not most of the time. Let me say often. If the market is still two-sided like it is today, we could still have a neutral day. Or we already got the week longs out because we took the opening swing low. Remember, the IB is a time-based thing, so we might still come out the IB high. But we already got up into our targets up above. That's what kind of creates this archeteria, you know. Whoops. This was the target coming up. This, you know. Now, we could still come out and go further, you know. But we might not. We might just stay in park because of this, you know, government shutdown thing that's out there. And if you go back historically and if you do some research on government shutdown threats, now I would say nobody believes the government will be shut down, but when you have an unknown in the market, it's a fundamental input that creates uncertainty. You might get some higher time frame participants just waiting, you know. I don't know. It's not for me to say, I just guess. So if I'm guessing, which is all this is anyway, then I'm saying I had two-sided trade yesterday. I see I still have it today. I've got my upside targets. I got my downside target. And I got longs and shorts on both sides. I've got my first hour high and low with a high probability. Pick one. But I got my targets. What do, Nani? See, we have neither. Both are open. So pick one or both. My suspicion is, now let's go back one step further, Nani. The higher time frame. Now we're trading really inside intermediate time frames as day traders, and then the developing time frame, right? But if you go one step higher, the all-time high is a week high. That is unfinished. My interpretation, not prediction, is we're going to make a new all-time high. Of course, the thrill of that is when we're going to do it. That unknown, and maybe never. So I'm inclined to be leaning north, but as a day trader, it doesn't matter. You know, I'm just going to align. So I'm leaning up, but it might not do anything until next week because who wants to go home over the weekend long or short? So we might just flatten out and abuse both sides and balance out and wait for new inputs. Or, Nani, go north. So the higher time frame is up. The intermediate time frame is rotational, and the daily time frame is balanced. And then, you know, I'm taking it down, Nani. You know what I'm saying? How we doing in YouTube, guys? Please leave a like. Give a like if you like this. If you're interested in the Trader Lab, it's open to all of you. There's no cost. I just have to caution you. It's about business. It's, you know, it's not like a lot of other things you've probably encountered. And there is no holy grail. There's no secret sauce. Everything I'm sharing with you is very logical. And you can, and the idea of Trader Lab is building out a business plan, which is a trade plan. In other words, you know where you're going to trade before the market gets there. I know where I will trade. And if I don't have a trade, I just sit and wait. I'm not here to keep busy. I'm here to exploit edge and take advantage of what the market offers and accept the random distribution of outcomes. I don't have a trade here, you see. So I'm just sitting here and I have no trade. So and I might be done for the day. I doubt it, because the market tends to be rotational all the time. So it gets directional and then goes into a rotation. So in Trader Lab, you would have trades and you take them one at a time. And the primary initial trade to learn is this rotational trading, this mean reversion thing. Because this trade from there to there, and I think it was, where was it? There, where was it? There to there, or someplace else to there. I don't remember. But anyway, there to there, there to there. You know, what's wrong with this? How many of these do you need to be able to put bread on the table? You see? And you can run these with 2 lots. You don't have to take a lot of risk. You do have to understand what you're doing. and you have to know that what this is and why it might do this. You need to know what this is and why it might come there. You can learn that in the trade. That's the primary trade. When you learn this trade and you go through the process of reverse engineering, extracting a statistical edge, you now build a proof of concept for yourself. You also prove to yourself you can do this. And along the way, you're going to have to learn to manage the lunatic. The statistics give you the control, not control of the outcome, control of yourself. That's the business of trading. I hope you're getting something out of this. And let me remind you, there's a couple things here. If you're interested in Trader Lab, there's 60 PDFs of structured trades you can download. You can use the link in the bottom of YouTube. There's no cost. It is a community of like-minded traders who come together to leverage their collective experience. The Trader Lab's about you. It's not about me. I'm just someone who's done this for 46 years. And I've walked in your shoes, and there isn't one person in Trader Lab who hasn't done the same thing or is doing the same thing you do. And we're all at different levels, and we're all looking to get better. Every day, I review these streams. Every day, I think about what's going to happen maybe tomorrow. I think about my performance. I journal. I do everything that's gotten me where I am today because I had to eliminate the things that were taking me out of the business. And it's quite a struggle to take the things you believe, because you're going to try to bend the business into what you believe it is. But it might be that you're trying to solve for certainty in an environment where it doesn't exist. How about solving for uncertainty and managing the emotional triggers that are part of operating in uncertainty? Is that logical? You can download these. Now, these are not mechanical. The thing to understand about trading, there's no plug and play. I know we all want it. When it does this, I do that. No, don't work that way. Because the condition of the market needs to be, whatever you do in the market must be qualified by the conditions. These are actual trades I've taken. A number of these elements in here, this was done back in 2020. I mean, I just whipped these together. I was doing research for add-on development with developers at Bookmap. Most of this stuff gets tossed in the round file, research. And then I was also just plotting some of these trades on here to show, and here's some of these actuals. And some of these are just screenshots. These are actual trades and the rationale behind them. 2020. Look at that. So I've been doing this. Trader Lab's been around for a few years. I'm a full-time trader. And you can see we're going up, right? So this is all available. You can use the link in the bottom of YouTube. There's no cost. You also get to access a lot of additional education. Bruce's pilot program, How to Extract an Edge. These are the kinds of things. There's other streamers, stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, a lot more. So bring your experience, bring your ideas, and bring your belief that you can differentiate your outcome from other traders. If you put a stake in the ground, learn from your experience. I had to learn from mine. And unfortunately, I'm a slow learner. I kept trying to fix something that was defective. And my belief was I was on the right track. It was persistent. It wasn't. I couldn't fix a defective process. I had to understand the business I was in and then adjust what I was doing to the actual process. Please give that like, support the channel. I appreciate you guys stopping by to Trader Lab today. Hope you got something from it. Trader Lab is here for you, and you do have to confirm your Discord username. Keeps the spam out, of course, and I'd like to meet you in Trader Lab. Please give that like and review this over the weekend. Plus, there is a library of webinars in the Trader Lab, the community, library, and a lot more. Take care, everybody. Look forward to seeing you on Monday. And thanks for visiting the Trader Lab. See you soon.
7, 6,